Hello guys, glad to have you on board again. Today we'll do the final intraday session of the week, as tomorrow we'll take care of the weekly swing trades closes, and to be honest, I think today talking intraday doesn't even make sense. We've been saying this since Monday. Today is the swing day of the week, as we'll have the GDP final number for first quarter in the US, and this is definitely going to be the game changer. We're going to see if Fed is right. I mean, the economy is really slowing down, or if Trump's magical views are dampening those visions. The expected number is 2.5%. We'll see how it's going to be, but anyway, even though this is 2.4, it still remains pretty fucking slowing down regarding the previous number that was 3.4. So we're 1% down, and still we're expecting those markets to make historical highs. So that doesn't even make sense. Once again, no matter how, it's just we're thinking short term, we have a short term vision, so Wall Street just wants good news, and just beating the 2.4 number could be taken as a good news, even if it is an actual bad news. It means the economy is slowing down, but just we might be slowing down at a slower pace than the one expected. So don't take that rational. Don't try to even understand the macroeconomics. All you need to assess right now is that things are not pretty, but the market just wants to price in pretty. So let it be, let it do. That stupid pricing will just erase that in a single straight line when dirty stuff will show up. So it's just a matter of time. GDP today could be that bearish stuff, but it also couldn't be, and we have a lot of things to come up later. So it feels like in order to sell, the market does want to have something strong. Last week's European bad numbers has been taken as a bad news, but do you really see a strong reversal out of this? No, all we've done is jittering the weekly charts by giving up a bearish close last week. But we need to confirm that this week, and if we don't, it means the bears are still not selling this market. Just means the bulls are cautiously buying, but still in that market. If they're paying for those goddamn supports, I don't understand what the hell is going on. So today is going to be changing. Therefore, intraday trading, when you know that the catalyst is going to be very much expected by the market, still suggests to me that it is way too dangerous to consider trading in those contexts. So I suggest you just go in here and assess the technicals. All right, in a 1 hour chart time frame, if you go to have a look at the SPX, all right, you'll see that we left a gap opened in here at 27.47, and I suggest this is where we have a cluster area. I'm not even saying that we're going to break through those levels, or that we're going to rebound out of those levels. All I'm saying is this is where the technicals are calling for price to get. So I don't think that we nearly are going to rebound today. I think we're most likely probably going to head to those prices by tomorrow. That doesn't mean today. Just make it clear to me, what counts down in this week is the weekly fucking candle close, which means we could close higher today as long as tomorrow we do another bearish day. That's all I give a shit about. So I think the GDP could be the actual number that pushes down to close the week in here. So bearish Thursday and neutral Friday is what I think is the most logical structure, but that doesn't mean Wall Street wants to play logical. Wall Street might just want to fuck up bears once again and try to take down a few stop losses out of those market tops. So wait for this, because the price structure can be a little bit more tricky. If you have a look at the 15-minute charts, what we're having here, it could be this A, B, C structure with a B point at the A point or slightly higher. So in those perspectives, generally we have what we call a range, flat range structure, but the C point as the B point is slightly over the origin, could be slightly over as well. So We barely touched the 61 in here. We could just try to reach out to this price. So please don't put the stop loss right at the market top. Just leave a little bit more room for those stop losses if you've been setting them in here. It's still hesitating at that point, which means the futures market is trying to find some ground in here and hardly doing so. So I suggest you patiently wait for further information. It's jittering at the morning. We're still failing to get to those highs. We'll see. I mean, it's probably Wall Street's hoping is going to set the new or going to set grounds for this afternoon. Either this afternoon is just purely bearish and we do some kind of triangle to go bearish. Sorry, but yes, this is purely hesitating at that point. It's goddamn hard to say how this market will react because we're just in ranging structures. It's just for dumbs to talk about. So I'm not even talking about that. I think the signal I gave you yesterday out of the 3-minute chart time frame hasn't been delivering throughout the night session. It went back to support area, and so far these prices are still holding. So we're back at the entry price. I personally didn't take that trade for the reasons you know. I'm already fully leveraged and I have no room to trade for now, so I didn't take the trade. If you did, normally depending on your risk assessment, you would just be either set the stop losses at break even and you must be probably stopped out by now, or you put your stop loss where I suggested you to put them at least in here, and if that is, then you're still fine at the current time and have absolutely nothing to fucking worry about, and you just let it go with those goddamn noisy assets that you just don't even try to analyze. All right, at that stage right now, all we can tell is that only bearishness is is important for us. Bullishness is just something you take as a risk management. You just let them the room to work their shit, and whenever they'll go too far, they're gonna have a sanction and prices should go down rapidly. So we're just waiting for bears to show up their faces again. So far, I suggest if 3-minute time frame signal gets invalidated, you should rise to the upper time frame. 3-minute definitely is aggressive, definitely is an intraday chart, but still it's been providing the gains, which means yesterday selling that price in a 3-minute chart time frame was a good trade. It's simple as that. We went back to support. Just the 15-minute chart is goddamn supporting once again. So take it out if you're aggressive and take a 15-minute chart trade instead. If you can take a large stop loss, then just do it and wait for the fucking price to work out the 15-minute context, which is still goddamn bearish. So that's all I would say. We've got a 15-minute reversal target in here, which means for the bulls could be a sign to place the stop loss down those lows and buy the market. I'm no buyer, so I don't give a shit about that signal. All right, all I would tell is that I'm waiting for the prices to get in the 15 fucking minute context to react bearish. I'll take that bearish that bearish trade eventually, but just a tiny intraday trade, because as I said, I'm still down the corner, so I'm not going to be aggressive and put some more leverage in. Just a little tiny trade probably to just grab 50 bucks on the day trade. But the thing is that I'm going to be selling tight stop loss if I have a signal in this area, or right into the red area if for some reasons the GDP were surprising to the upside. All I care is to have that goddamn weekly chart to close with a bearish candle. All right, what I want is this little bitch in here closing at the lows by tomorrow candle close, which means all that happens today is none of my fucking concern. We could go closing at the high today. All I want is to have a Friday bearish. A bearish Friday. And as long as this weekly candle closes below last week's bottom, I'm fine. That's all I want. To show the bearish confirmation of those goddamn stupid bearish trades we had last week, 2 weeks ago. This is absolutely irrational. It was as crazy fucking stupid as I've ever seen the market pricing things in. I want to see this reversed and invalidated. All right, this area is where dumbs are buying the market. And I don't know how we can call that structure. I've rarely seen any reversal like that. I mean, when you have that kind of breakdown, you rarely have an 85% retracement. So it is irrational. So like I said, those patterns are not technicals. Absolutely not. This is the reason why you needed to be really cautious trading those areas, because it isn't about technicals. It's just about seeing how fucking far we can go without breaking everything in between. I think we're about to break it all because we've gone really too far. But still, price is king, and price is what brings you gains or losses, and at some point you can easily handle gains, but you cannot end up with unlimited losses. That's not how it works. So if losses ends up being going beyond what we may accept, I'll have to get the fuck out and wait for prices to get back into my expectations. So far, what we had last week is what I wanted. The price shows some bears at play again after some exhausting weeks to wait for this. I want to see the bears confirming this goddamn signal. If they don't, then something really goes wrong, which means either we're going to have to range this area for a longer period of time, or simply the bears are not there and the bulls will just keep on pushing higher, and therefore I'll have to get the fuck out. I'll tell you when I'll have the information by tomorrow. Obviously today is the weekly game changer, so avoid intraday trade. Put the stop losses further away if you want to maintain intraday scenarios, or just wait if you're a low risk swing trader. Wait for today's close and tomorrow weekly close to confirm either the bullish or bearish vision for the week to come. That's pretty much it for today. We're going to talk about Tesla as well. So Tesla's week. I mean, look at this beautiful expectations on Tesla. We're talking about an asset that is expected not to make profits again, which means Tesla's Musk has been bullshitting for years that the Tesla will be profitable. That's great. They barely turned positive for 2 quarters in the most bullish context ever seen in the US stock market, which means even in the best financial conditions, accommodative Fed, mixed feelings about the future. So we had Fed pushing the buttons and the economy hesitating, therefore we had the best context for speculation in decades. And even in that context, Tesla barely managed to turn positive for 2 quarters. And guess what? We just broke that killing streak after 2 attempts. So that's great. But Tesla is probably never gonna make profits. So how the shit can we price that higher than Ford or General Motors? That doesn't even make sense. So analysts who are pricing that in might be pricing profits from 20 years from now. But at some point, we might have a recession in between, which means valuations will go down. It is not about time to price magic prices. I mean, who the fuck can be pricing Tesla at $450? Well, but some analysts are doing so. So those guys, I don't know what the fuck they might be thinking about the stock market, because at that stage it's not about risk taking, and especially not buying a goddamn company that doesn't make profits. But more likely saying, oh right, so at this point we might return back to rationality, which means at least return back to the previous range, which seems to be that to me, $250, not going to hold as a support. It's just a matter of time, but we're fighting bearish monthly charts versus weekly some sort of support that the market doesn't want to break so far. So what I have is a very dangerous price structure. I don't even think and nearly think that this is going to react bullish regarding the monthly close we have. But if those guys want to knock me down, they're going to have to reverse this, which means if we close below this and below 50%, it's just dead for bulls. They're not going to get that. So if we do have that, it's going to be hard for them to hold things up together. So I suggest, first of all, we need to hold bearish for those who have bearish visions. The stop losses must be set on top of this bearish gap and must remain there. So I reinforced, tiny reinforced yesterday. Obviously, the price is not the best, as yesterday's session managed to close at the highs. But I mean, as long as this gap is holding on, I see absolutely no risk. I mean, look at the structure. First gap, second gap, third gap. We're just building ourselves for a breakout. So we could try to fill this gap, but I don't really think we're going to do it. All we think instead is that we're going to test it, reject it by today's session, and probably have a negative Friday. So I'm looking out for this. I never thought, I mean, I was questioning myself. Either I took the selling entries in here or in here. I decided to go aggressive. It wasn't necessarily the best choice. I would have had just a little bit more shares to sell if I sold this price instead of this one, but that's not the big of a deal. I mean, it's 4% move, so it wasn't going to change that much anyway. So all I'm saying is that as long as your stop losses are on top of this gap, normally you're fine. If prices were about to go there, I'll definitely trigger my stop losses, which means reaching again to bearish context in the 4-hour charts doesn't even make sense to me. And if we do go there, I don't know what may trigger such price action. It will be totally off the grounds for me, which means I'll get out and wait for further information to eventually sell again. We've got lower highs, we've got everything we need for the breakdowns, we've got the price structure rejecting the trend channel every time. We might just make a fourth fucking attempt. I mean, first rejection, second, third, fourth one to come. At some point, we're finally gonna break that shit. I mean, the goddamn thing doesn't even make profit, so why do you even buy that damn shit? It doesn't even make sense, so just let it go. It's normal to break down, so it feels like we cannot destroy value in Wall Street. We can only pay for stocks. I mean, god shit, we've gone too far. It's about time to go back to reality, and Tesla must be among those who break the monthly support first. That's just normal. This asset is not meant to be priced that much. All right, the normality back to normal valuations for Tesla is in here. That doesn't mean Tesla is going to die. It just means we're going to put them under pressure, which is what we need to do facing potential recession trades. Regarding Apple, it's hard to figure out how it's going to be. We've been highlighting the area in the cluster area to be 195 up to 205 boxes. So we could eventually try and go a little bit higher in the forthcoming days on Apple. But anyway, I suggest you guys are bearish any fucking way because we had some signals. These are gray signal. That doesn't mean you need to be aggressive and putting the stop loss on top of those levels. But most likely you need to be in just in any case, because if for some reasons Apple were about to go down today, you don't want to be catching up on falling prices. All right, so I'm here. I know the price can go a little bit higher, therefore I'm taking this as a risk management. I still have 50% of prices available to sell at higher prices if we were about to go there. But if we just don't, I mean, everybody who's waiting for higher prices is just going to be left behind, and I don't want to be among those guys. All right, so wait for this. The momentum is still positive in the 4-hour chart. Therefore, having another push kind of could make sense, but that doesn't mean it's going to happen. The difference is this. A guy who thinks he understands the market will tell you, all right, we're probably going to make another high, so I'm going to wait for that next pick to sell. Well, you try to control the market. Guess what? It probably isn't going to work that way. So we're entering the bearish area. We have early signals. You just adjust the strategy. You know it can go a little bit higher. Therefore, you're risk taking this potential up move. But you have signals in the area. You need to get the fuck in. You just need to go just 1 foot in, not necessarily jumping in with both feet. All right, that's how you do. You adjust the risk, but please avoid the goddamn black and white answers saying it will be bullish or it will be bearish, and I'm entering in here fully leveraged, and I'm not trading any different. All right, don't do that. I mean, never ever trade a single price because this price is the price you think the analysis is going to bring to you. If you do this, it's not going to work. Really, it isn't. This is not what trading is about. Really learn how to appreciate shaded areas, learn to moderate your visions, to let some rooms for the prices to work, because the more you're trying to control them, the less they will react accordingly. That's pretty much it. Still waiting of course, for that goddamn dollar to give that bearish signal. We're still trading that upward move, right? So we're still consolidating in here. First wave, we've got an dynamic correction, which means we A wave, B wave dynamic, so A, B, C in here with higher lows. We're now building the second bullish impulse in here. So no consolidation. We're 60 to 76% retracement. We're right into the expected area, working this area as well. I mean, this signal the other day goddamn great signal, which means I was ready for these prices not to reverse in here and to try making a little bit of excessive prices. Reason why my stop losses remain there. And now I'm just waiting for the breakdowns to confirm that we finally reversed. But I did take my speculative trades. And guess what? Selling this price or selling this price, how does that even make a fucking difference? The goal for speculation is not to catch the top, it's just to have prices on top of the breakup areas, or the breakout areas. The breakout area means breaking supports, so all you need is to have prices on top of those supports, and obviously as close to the resistance as possible. But if we end up being the market top in here, is it really a big difference to have been selling in here instead of there? All right? It's just simple as that. It could have reversed in here. Odds were mixed. Doesn't mean it was very aggressive, right? So right now we're waiting for another signal, probably breaking through. So we've tried to break through context this morning. I expect we're probably going to try going a little bit higher, as this attempt in here hasn't been triggering any signal so far. All right, so just this is how you apply a strategy. You need to figure out how the price reacts in expected areas. We got into the expected area. You got early signal, not an aggressive signal, telling you, okay, you can start jumping in, just don't be too aggressive because this is a goddamn gray signal. But remember what the rules are. When you're having a gray signal and a gray dot, it says this is overload, which means the momentum is overloaded. We might do two things: either reject strongly bearish and kind of a V-top reversal, or we could just have to range to let some room for this momentum to restart again. We done exactly this. We returned back to neutrality, back to negative value, and instead of bears taking it over, they just been lateralized and the bulls are now pushing again. But is that trade a bad trade? Definitely not. All right? You just take what happens on top of this as a risk management. That's it for today. I have no more to say, so watch out for this GDP, avoid intraday trades, absorb the volatility that could be underlying in the forthcoming hours heading into that numbers. I don't know what the number is going to be. I far less even know what the Wall Street's expectation, what the Wall Street reading out of that numbers will be, and even less how prices will react from that lecture. So, facing highest level of uncertainty out of a very expected catalyst, goddamn do nothing and just wait for the daily candle closes and the weekly closes by tomorrow. See you guys tomorrow to talk about that and have expectations for the weekly close. We might eventually, in such context, not do yesterday's show on the morning on the usual time scales, but eventually doing the weekly candle close show by the weekly candle closes area when we'll have more decisive information to talk about. All right, so if you don't have tomorrow's show in the usual time scale, then don't be surprised. It means I will wait to have to get closer to the candle closes to make those videos. Bye, guys.